The market feels and has felt like it just wants to continue to march higher. And it's felt like that for a while. And so every time we get a big headline and, major negative news, especially out of the Middle East, yeah, the market may draw down a few percent, but it bounces right back. And here we are again, touching all-time highs. And so it's been an extraordinarily interesting, but again, really difficult market to navigate around when you're trying to take advantage of moves, but keep your core conviction and not get swept up with negative hype. So that's been it's made it interesting, to say the least.
Lavish begins by pointing to a pivotal moment, the Bitcoin deleveraging event in October. This wasn't just a routine correction, it was a shock that caught nearly everyone off guard. Leading up to this event, there were subtle warning signs. Early Bitcoin adopters, often referred to as OGs, had been quietly selling massive amounts of Bitcoin throughout the year. We're talking about hundreds of thousands, even over 1 million coins being offloaded into the market. But this wasn't panic selling. These were long-term holders who had accumulated Bitcoin over a decade or more. Many of them had seen their holdings grow into tens or even hundreds of millions of dollars. For them, this was a moment of realization, a chance to convert digital wealth into tangible assets like land, property, and long-term security. As Lavish frames it, this was a natural and even healthy phase of the market cycle. These investors had conviction early on, and now they were simply rebalancing their lives. However, the cumulative effect of this selling pressure created a fragile market structure. So, when the deleveraging event hit in October, it triggered a cascade. Confidence dropped, momentum stalled, and once Bitcoin fell below the critical $100,000 level, sentiment shifted dramatically. Despite attempts to recover, the market struggled to regain its footing.
Yeah, well, so the deleveraging event back in October was that took everybody by surprise. I mean, you had a little bit of a hint and indication leading up to it. If you look back, you had OGs selling hundreds of thousands, and it looks like over 1 million coins going throughout last year. And so they were just kind of sitting on it, and they were cashing out. God bless them. They had been sitting on this asset for how many years? Some of them for a decade, and they're sitting on it or longer. And they suddenly had made tens of millions, or some of them hundreds of millions, or even billions of dollars. And they're like, I'm out. I'm going to go buy my land. I'm going to go be completely self-sovereign. It doesn't matter what currency I'm in. I'm going to get my assets. And so that was kind of going on throughout the year between 100 and 125,000 Bitcoin price. And then you had that deleveraging event in October it just kind of took everybody by surprise. And we never really recovered off of that. We tried to, but the space lost confidence. And then once it broke 100,000, that was kind of it. So, and then you've got all the tariff, the market reacting to the tariff headlines, the tariff announcements, the tariff, the rulings in the courts. I mean, there was just one thing after another. Yeah. And then you had the war. And so, and that kind of took everybody on, the whole market kind of moved in a way that people didn't expect. So first of all, you had gold and silver rip higher going into the end of the year. And last year, like just painfully giving, people like Peter Schiff a massive amounts of ammo at Bitcoin and the crypto space. But, and then the war hits, and funny enough, Bitcoin hangs in there, and things like gold and silver, which are supposedly the safe haven assets, or at least gold, starts to fall. And so it's been, and then you've got the movement around AI. You've got the top 7 largest companies in the S&P 500, the Mag 7s, who were reaping gains from AI, all except for Apple. Apple was not really involved in AI up front. And so those stocks had just skyrocketed, and then suddenly there was a rotation out of them into other names. And so again, it's been a really interesting period. And that's just talking about the investment side. But on the economic side, now you've got the Fed that has a new chairman coming in, we think, and you've got them almost outwardly fighting with this administration, the White House, and refusing to move on rates. It's difficult to see exactly where the economy is going because it's being driven by the top demographic. The wealthiest demographic is really driving this economy, whereas throughout the years of 2021 through 2025, it was really just fiscally driven, most of it, along with what people here are calling the boomers, which the wealthy generation is just spending hand over fist. And so that's been driving the economy. At the same time, you've got the younger generation struggling to buy houses, struggling to keep up with the economy because they're wage earners and they don't have assets. And then you've got AI in the mix. And I can tell you firsthand, it's eating up jobs. Now, how quickly that occurs and what the actual fallout of that is, I'm not a doomer on that. I don't think that that's going to destroy our economy. I think it's going to enhance it, at least up front. But people are going to have to embrace it and move around it. And you're seeing companies lay off swaths of thousands of tens of thousands of people because they just don't need to have them now. Their jobs are literally been replaced by these language models, and that's only going to grow. So it gives the markets a little bit of they're just operating on uncertainty now between the rates, between the economy and unemployment, between the war, between AI and the changes that are happening or going to happen with AI. It's just the market keeps moving around these things. But here's the funny thing, LG. The market feels and has felt like it just wants to continue to march higher. And it's felt like that for a while. And so every time we get a big headline and, major negative news, especially out of the Middle East, the market may draw down a few percent, but it bounces right back. And here we are again, touching all-time highs. And so it's been an extraordinarily interesting, but again, really difficult market to navigate around when you're trying to take advantage of moves, but keep your core conviction and not get swept up with negative hype. So that's been it's made it interesting, to say the least.
Lavish then offers a rare look into how his fund operates, revealing a fundamentally different approach to investing. Unlike traditional funds that hold cash or dollar-based assets while waiting for opportunities, his fund operates on a Bitcoin standard. Any capital received, regardless of currency, is immediately converted into Bitcoin. This reflects a core belief: Bitcoin is the benchmark. Rather than measuring opportunities against fiat currency, investments are evaluated relative to Bitcoin's potential. And after a significant drawdown, Bitcoin itself presents a highly attractive risk-reward profile. This creates a high bar. Many investments simply don't outperform Bitcoin on a relative basis, making them less compelling. However, when opportunities do arise, particularly in private markets, the fund is positioned to act quickly.
Yeah, so it was not a great year we raised our second fund last year,
Right.
and it wasn't a great year to what we thought it was going to be.
Right.
Now, to step back, last summer, you remember we had all that hype around the Bitcoin treasury companies. And there was just one after another was being announced, and some companies were pivoting to a Bitcoin strategy. Some small companies that had other legacy businesses that they just decided they wanted to do something else, like Semler and some of the other ones. Well, so there was a lot of hype around that. And for our fund, what's different is we don't have to buy in the public markets if we don't want to. We get access to some of these things early. And so, and it's just because we can commit. It's not that something you can do on the retail level. So they go to the banks, they get commitments from you, and then they start working around the deal for a private placement that is it's priced off those commitments, and you're able to get in on some of these at much better prices. So what do I mean by that? Well, the Bitcoin treasury companies, for your listeners who don't know the math around it, most of them are judged on what's called MNAV, and that's basically where their shares are trading. And the best way to do it is enterprise value, including shares and debt and cash, and you put it all together and get what the whole enterprise is worth. And then you divide that by the amount of Bitcoin that you have on the balance sheet. So if you're a company like MicroStrategy, you might command a 1.25, 1.5, 1.75 ratio, because your growth in Bitcoin is, you've got these levers to pull where you're going to get more Bitcoin down the road, and it's better for your underlying shareholders. So, but you had some of these companies that were trading in the market. They would come to market, and they would trade in the market at multiples that were crazy multiples, 6, 10, 12, 15 times MNAV. And people were buying them in the open market. We didn't have to do that. And we didn't do that. We avoided all that. So, but even then, even though we were buying some of these companies at 1 times MNAV, or just barely above or barely below 1 times MNAV, which is a really good price for them, well, Bitcoin still drew down, and they all drew down along with it. And so margins compressed and everything. So the mark around those was, it was pretty volatile. So how do you deal with that? Well, to answer your question from earlier, which is, okay, you've got these great opportunities. It looks like a great opportunity to come in. Yes. And we're still raising money for Fund 2, and we think it's a great time to do it. So I can't make a public, pitch to people. Our fund isn't appropriate for everybody. It's, first of all, you have to be an accredited investor, and it has to be something that we feel is appropriate for your portfolio. So we talk to every single investor, make sure that this is something they want and it fits for them. But we are on a Bitcoin standard. So we don't sit in US dollars, because we're a Bitcoin based fund. When somebody sells, if they send us dollars, or Canadian dollars, or euro, or whatever it is, we immediately turn that into Bitcoin. And so it's on our balance sheet as Bitcoin. It's on our balance sheet as dollars. So a lot of funds, what they'll do is they'll get investments from around the world, and they'll immediately turn into dollars or short-term treasuries and sit on those while they're looking for investments. Well, what's unique about our fund is that we look at investments against Bitcoin. So if you're looking at investments today, there are not that many investments that look all that attractive on a risk reward basis versus Bitcoin, because Bitcoin is down so sharply over the last 6 months that now we're looking at Bitcoin. It's got a fantastic risk reward ratio. Now, some of those things those opportunities do come up. They come up in short time frames. So you have to be nimble, and you have to be ready to turn that Bitcoin into cash to be able to send to an opportunity, or negotiate out sending Bitcoin for that investment. So those are things that we do. But just like you said, we think it's a great time right now to be investing in this space. And so having that Bitcoin, sitting on that Bitcoin and watching for opportunities, this is where we feel like it really gets good.
Despite the challenges, Lavish remains optimistic. In fact, he believes the current environment presents one of the most compelling opportunities in recent years. With Bitcoin down significantly over the past 6 months, its risk-reward profile has improved dramatically. For long-term investors, this could be a moment of accumulation rather than fear. The key, however, is discipline. Opportunities in this market appear quickly and disappear just as fast. Being nimble, ready to deploy capital or reallocate assets, is critical. And above all, maintaining conviction amid noise is what separates successful investors from the rest.